This is Scott Becker with the Becker Private Equity Podcast. We're thrilled today to be joined by one of our most listened to guests, Rick Kess from RSM. Rick, the private equity market, there's an article that kicks off in the Wall Street Journal today saying that it was in a challenging spot prior to the trade wars and tariffs. Now it feels like somebody going under the knife. Give us some good news. Tell us your thoughts on where the private equity deal market is going, the fundraising market. Tell us what you're seeing and give us something uplifting and inspiring, notwithstanding the Wall Street Journal article, notwithstanding the markets today. Give us some good news. Can we ask you to do that, Rick?
Well, Scott, I would love to be able to just come on and talk about all the positivity that we're hopeful for. But I mean, I do think that there are pieces of positivity out there. When it comes to private equity, obviously, there are headwinds against us. I would say, uncertainty is never good for any investor. Doesn't matter if you're private or public, but if there's uncertainty in the market, it's harder to predict what will come together in the future. So, it's not unlikely that somebody would say that right now, we've got a pretty high level of uncertainty of where the future will go, whether it be because of tariffs or other regulatory challenges that have come up in the recent kind of 6 to 8 weeks or so. So, I do think there's a lot of uncertainty, but I think with that uncertainty, there's opportunity to find value. I mean, I think, we continue to work with our clients on becoming more and more efficient because, and more in the direction of a higher quality asset, because I do think there's still money to be spent. There's still investors that want to get into new sectors or new markets or new what have you. So I think the assets that seem to continue to have the ability and desirability to be traded are those that are operating at the highest level that they possibly can and that are, considered A assets, so to speak. So that's really where we come to our clients at is, if you have the desire to be traded in the near future, you have to become as close to an A asset as you possibly can. Otherwise, it's going to be somewhat challenging. But if you are an A asset, then you have the ability to kind of potentially be traded at some point in the very near future.
And I think it's so interesting because what you're saying coincides with some of the discussions we're having. I was just on a deal call where the private equity fund could not be any more excited about pursuing deals, especially mid-sized deals, not large bet the farm deals, but mid-sized deals, and trying to grow EBITDA in a tough environment and find ways to do so when organic's not easy. So I think you're right. There are some glimmers of hope out there, and there are people wanting to put money to work. There's an incredible amount of deals that are teed up to go to market and an insane amount of money to be put to work, and a little bit of caution out there as to getting those two sides to meet because of the uncertainty in the environment and everything else.
Exactly. And I think you got a lot of people with high levels of anxiety related to the uncertainty. But, again, when there is uncertainty, the things that are as close to certain as possible. So things that have, relatively less, demand elasticity. So things like, healthcare services, which obviously I spend a lot of time in, other things that, maybe have a little less exact, kind of impact related to other, economic impacts. So, I do think that there are areas
It,
of opportunity.
and let me ask you a question there. I was on a podcast earlier today with somebody who's in the med spa business, and they were saying sort of med spa, plastic surgery, cash pay, but even so, feeling a little bit recession resistant because it's one of the luxuries or one of the things that people want to keep on spending money on, um, regardless of the economic downturn, unless it gets so bad. Like people want to do their eyes, they want to do this, they want to do that, and they also the med spa stuff is still very popular. Is there a feel for that on recession resistancy or not?
I don't know about med spa specifically. I don't spend enough time, digging into the data behind med spa. I mean, conceptually, I think there are some fact patterns there that make sense to me. I mean, I know, my social network of people, I think a lot of people, value that type of service at a pretty high premium. So I do think that there is some logic behind saying, it would take a pretty drastic recession to impact, some people's desire to receive those services. But again, I don't know the data specific to that to be able to really comment with too much granularity on that specific area.
No, thank you. But your overall take is, look, it's a little bit, a lot of uncertainty in the air, a lot of pauses going on. But notwithstanding the pauses, there's still a lot of pent-up interest in doing deals because aside from everything else, there's a whole industry that's been built around doing deals and investing and trying to sell and to buy and to resell and grow and so forth. So there's still a lot of pent-up interest in just trying to find that spot where you could hit that, where you could find the right where you could find agreement on pricing with a lot of uncertainty.
Yeah, and I think a lot of private equity group LPs, they're some of them are large pension funds and other large institutional investors. And if you think about it from their perspective, they're involved in private equity to try to kind of minimize the volatility of the public markets. Public markets being so volatile, it kind of makes you wonder, like, is this the time for private equity to really show their value of bringing stability and long-term growth to those limited partners by saying, we're a little bit different. We're obviously been telling you we're different than the public markets, but this is our opportunity to prove it to you. And so I think that's, another area of that, our private equity clients are really trying to focus on is how do they make sure that they're kind of consistently telling that story of value to their LPs, considering the relatively high levels of volatility that they're seeing in the public markets on their other parts of their investment portfolios.
And just a question on that. Some of that is false comfort. Some of that's real comfort. The private equity funds are supposed to revalue all the time, every quarter and so forth. They're investors, but they're not real numbers because it's not been sold. The asset's not been sold. So in some ways, it's very hard to judge as a private equity investor where your capital is really at compared to the public markets where you see it every day. And I guess there's at least some comfort in knowing that it's privately held. It's not being traded. It's not really being valued exactly every day. So at least you could breathe while you wait and hope, but it is illiquid. And so you're sort of stuck to that extent. But no, I think your point is so well taken, Rick, is do they prove that, hey, this ends up being a good asset class in a time of uncertainty, and how does that play through?
Yeah, and I think that's the message private equity has been telling limited partners for a long time. And I think, for the large extent, they've been able to prove out long-term value, but now is another way to show them that, this is an asset class that can help kind of balance your portfolio in these, relatively uncertain times.
Well, I tell you, a lot of portfolios will be going under the knife next year. We'll keep on keeping an eye on it, Rick. I want to thank you for joining us again on the Becker Private Equity and Business Podcast. You're spectacular. Rick Cass, RSM. Thank you very much.
Thank you, Scott.
If your job at a healthcare facility includes disinfecting against viruses, prevention is the best medicine. And maintaining healthy spaces starts with a healthy cleaning routine. Grainger's world-class supply chain helps ensure you have the quality products you need when you need them. From disinfectants and cleaning supplies to personal protective equipment, so you can help deliver a clean bill of health. Call 1-800-GRAINGER, click Grainger.com, or just stop by. Grainger, for the ones who get it done.